Let's head straight to the Nigerian stock market now as equities market close on a negative note amid sell-offs and buy interest as NGX All-Share Index depreciated by 0.19% to close at 47,340.86 basis point against 0.02% depreciation recorded on Monday. Well, its year-to-date performance currently settles at 10.83% after rising to around 11%. Market breadth closed negative as Unicap led about 15 gainers against 21 losers, topped by Cornerest at the end of yesterday's session. If we compared it to the last previous session, market turnover closed negative as well. Volume moved down by about 85.69% against 11% recorded previously. UBA, Access Bank, FBN were the most active stock to boost market turnover. Seplat, Zenith Bank. Seplat is back in the top market value list for Tuesday. Linkage Assurance led the list of active stocks that recorded impressive volume spike at the end of Tuesday's session. So if you look at the top 5 gainers, the top 5 losers, and then of course the movement of the sector, the sectoral analysis, we're having just the NSE banking declining by 0.75%. Then you also have NSE insurance declining by 1.32% on Tuesday. Industries is back in the red by 0.27%, except for NSE oil went up by 5.36%, and is the NSE ESM board remained flat at 0.00%. So let's bring in a good time to bring in a regular analyst on the show, Mr. Ambrose, Chief Research Officer, Investor Consulting Limited. Thank you for joining us, Mr. Ambrose. Well, the index, if you look at the market yesterday, depreciating by 0.19% to close at 47,340.86 basis point against 0.02% recorded on Monday. This is the 4th decline in about 7 straight sessions so far. So is the beer returning gradually to market? Let me start from there.
Yeah, actually, I would say no, but in a mixed market where we are seeing no positive sentiment today, the next negative sentiment, it tells you that volatility that we've been experiencing the past most 3 weeks now has been there. And for me, it tells you that in the midst of all that is happening globally and also at the center of the peak of any season, this trend won't last, because the more investors see positive number, they react to that direction. Like, you remember what happened early last week when the press school released notification that they want to give they're likely to give bonus, and also their meeting for board meeting will come on the 23rd of. You see, market reacted to that positive information. It tells you that it is that trend that we'll be seeing here. Yesterday there was no result released to the market. That was market was a bit door, and it closed negative. But the good thing is that if you look at the price structure that or the index structure as at yesterday, tell you that the sellers are trying to control the market now, because there was a change after we saw a 3 days rally. There was a change on Monday. Yesterday was another change. Tell you that pattern that is not displayed on the screen. You see the pattern and change of what we call a index change pattern. You see how it changed. There was also a kind of 2 candlestick that precede another bullish candle. That earlier I've given you a sign. I will give you communicate to you that things are not in order for you as an investor to watch. But the good thing is that when you see such pattern that I just said now, you now wait for a good support price to buy, because the pullback we just saw yesterday and on Monday shows that stocks are becoming cheaper for you to buy lower at a lower price. It tells you that you cannot accumulate.
So you are saying it's the right time for investors to start taking position.
Especially those companies that have not released their audited accounts. Especially if you are an income investor, if you're a dividend investor, as the price pullback, it creates a point for you to buy more. And if you get more units, that's where you get more dividend from the company. Not that it pulls back, for me, it's a good time. But only that investors in this market also should not be carried away with when they see market pulling back. It's not a sign of you to just panic. If you know your investment objective, why you're in that stock, and what attracted you, I always say it's still intact in that stock. You don't need to panic. All you need to you take advantage of the pullback to accumulate more. If the information or what you saw, that the fundamental or the technical pattern is positive, when you see the price come down, if you have money, you accumulate more to get more position. That is what. If something attracted you are not there again, it's like disintegrating. You also sell. That is why your stop loss is very important. Even when things that attracted in the company are still intact, but it's not your surplus, you can also equally say because you are there to protect your capital at the same time. That is why I don't joke with my surplus whenever I'm trading or whenever I'm teaching investors, because you need to know how to use that one effectively. Once you can use your stop loss very well, your capital at any time will be protected.
Let's wrap it up with this because of our time. Give us a sense of where we should expect the next release of financial report from which sector, because we talked about the fact that some companies and some sectors we've seen some of those results already. So where should we be looking forward to? And then secondly, is the midweek Wednesday third trading day of the week. What exactly should we expect to play out in the week?
Actually, yesterday the Brose actually released their figure for inflation, and there was so kind of uptick little in the north direction. That also should also trigger some thought from those in the fixed income market, because if inflation is going up, automatically you are having more negative return in your fixed income position. Also, we're having an MPC meeting next week. I see that market was related between even today, but because of the pullback we saw yesterday and also interpretation of the inflation figure yesterday, we might see funds trying to find their way to equity market, because but believe that the decline we saw last week in the Treasury bill option, and also now saw inflation also looking up again marginally, and we know that this inflation will continue because the cost of all this related energy cost has rallied. That will support cost of production and cost of price of goods. That means for that a good designing fixed income market, know that at this time we're going to see more inflation. That will also put their portfolio, their real return to a negative position. For that, they might adjust their portfolio. That also might push fund to equity market. You might see a kind of rebound today. It's possible, depending on also if company release their number today and they're positive. So for me, I said we expect a mixed market between now and end of the March 31st. As a result, our common market to be reacting to that. That's why in this oscillating market, don't be carried away. Once you meet your target, you take your profit and smile to another. Either start to back or you move to another store.
I love the way you're smiling, because when you're talking, you take your profit and smile. I saw the way you're smiling. But I think we need to leave it there. Ambrose, Chief Research Officer, Intraday Consulting Limited. Thank you for coming on Business Breakfast. All right, so we go straight now to take a look at the other commodities now. Looking at the global oil price, as monitoring groups have called for fuel prices to fall as the cost of crude oil fell to its lowest level for 2 weeks. The price of Brent crude, the global benchmark for prices, dropped below $100 a barrel for the first time since the start of March. Petrol prices hit another record high on Monday, meaning it costs more than $90 pounds with a family car, according to a report. But the average price of a liter of petrol rose to around 163.7 on Monday, and diesel also hit a fresh record of about 173.6. Well, but in the past few days, the price of oil has dropped due to a number of factors, including hopes of progress in ceasefire talks between Russia and Ukraine, and also expectations that demand from China will ease as COVID cases there surge. Well, look at the gold market now. Prices, gold has done a screeching U-turn after approaching a record high last week. The entire commodity complex has seen a wild swings in price as the threat of war undermines supply lines and post-pandemic recoveries, while the broader commodity price action has played a role in the demise of the precious metal. Rising real yields are also working against it. The US 10-year real yield has risen 45 basis points since last week low. Well, I think this is where we call it a wrap, and that's our package today on Business Breakfast. Many thanks for watching. We'll be back again tomorrow. I am Frank Omalapel. See you again.